Welcome to Profit X, NIO Stock Analysis, Part 7. In Part 6, we found several bullish developments on NIO Stock chart. Bullish pennant, Bollinger Band squeeze, Bollinger Band double bottom, and a MACD crossover. With NIO Day upon us, we go back to NIO Stock chart and show you some of the incredibly exciting bullish developments that have occurred over the last 2 days. So, if you're a bull or a trader, tune in very closely. Let's cut through the noise, distinguish noteworthy from not, consult the chart, and help you capitalize big on NIO Stock. If you're new to the channel, I'm Ben, lawyer turned real-life investor, best-selling author, and CEO founder of the Profit Trading Group in Silicon Valley. And welcome to Profit X, where you will learn how real-life traders and investors actually make trading investment decisions, pounce on trading opportunities, and grow and manage world-class stock portfolios. So help me help you, and hit the subscribe button. All right, let's get into the start of this minutes. As we learned before, truth is within a combination of trading signals and in no one signal. In the previous video, we saw a low volume breakout from a bullish pennant, and we wanted to wait and see increasing volume as the breakout materialized. And that's exactly what we got on January 4th. 212 million shares traded on the 4th, with 188 million being the 50-day average, as well as January 8th with 220 million shares traded. That upper trend line is now a support level, and since we broke through the bullish pennant, we haven't tested that upper trend line, even on the second day of the bearish engulfing reversal pattern that formed on January 6th. Now, if we broke through the bullish pennant, why do we even have a bearish engulfing pattern on the 6th? Let's take a closer look. Here's a 15-minute chart of NIO's share price. At about 1:15 p.m. on January 6th, share price begins to decline. Around 2 p.m., rioters gain entry into the Capitol building, and shortly after 2 p.m., Capitol Police ordered all staff, reporters, and nearby senators into the Senate chamber. The sell-off lines up with the Capitol protest and can be found in most other stocks. Furthermore, any worries about a bearish reversal were relieved the following day. In order to confirm the bearish engulfing, we would have to see share price open lower the next day and continue declining. Furthermore, volume should be higher on the bearish candle day relative to the other candles. Bearish volume was at 175 million, well below the 50-day average. Furthermore, a gap up may demonstrate bullish sentiment similar to explosive bullish volume. And sure enough, we gapped up on January 7th and shot up on January 8th. Breaking through a weekly long-term resistance level at about $54.37. Even with the events that transpired on January 6th, we never tested that bullish pennant's upper trend line, the support line. In fact, we broke through long-term resistance. Furthermore, notice the money flow index. The money flow index spikes the day we break out from the bullish pennant. And following a small decline on the Capitol riot day, money flow index stays above the initial breakout levels. Now, take a look at the weekly chart. The balance of power is an oscillator that measures the strength of buying and selling pressure. When the indicator is in positive territory, the bulls are in charge. A negative reading means sellers are in charge. When share price makes new highs, and the balance of power makes new highs as well, you have a valid form of confirmation for the rise in share price. Here we witness share price make new highs from December to January 2021. And the balance of power makes new highs as well, matching share price movement. What's more, NIO's weekly chart reveals what looks to be the formation of a bullish flag. More specifically, a bullish flag possibly at the brink of breaking out. Note the strong rise in share price from mid-October 2020 to early December 2020, forming a flagpole, and the tight consolidation that follows from late November 2020 to early January 2021. Bulls are not waiting for better prices and are buying every chance they get, as also confirmed by the balance of power readings. And on January 8th, 2021, it seems we broke through the upper trend line on that weekly bullish flag. The bullish extended range candle breaks through the upper trend line resistance at about $54.50, closing well above the trend line at $59.06. Volume confirms the breakout. 876 million shares traded on the breakout candle, beating the 50-week average volume reading of 538 million by nearly 40%. Now, only one candle accounts for the bullish breakout, so we will need confirmation before reacting. However, this bullish weekly flag coupled with the daily bullish pennant are both quite bullish signs for NIO's future share price. In our previous video, we also witnessed a textbook squeeze occur with what looked like the beginning of expanding Bollinger Band. Remember, tight bands turn into wide bands. Explosive share price movement. Here we find the Bollinger Bands were at their farthest point in mid-July 2020. The bands narrowed, reaching a low in October, bandwidth around 70. Fast forward to present day, we find bandwidth is below that 70 point, hitting a 6-month low at about 54. Why does that even matter? Again, a squeeze means volatility is low. And since volatility tends to be mean reverting, that is, periods of low volatility are generally followed by high volatility, we know the bands will probably expand, which means increased likelihood of an explosive move in share price for NIO in the very near future. And that leads us to the stochastic oscillator. We know NIO's RSI readings are pretty high for the monthly and weekly charts, so a stochastic oscillator is a popular technical indicator or tool for determining overbought and oversold conditions. Generally, if the K value rises above the D value, a buy signal is indicated by the crossover, provided the values are under 80. Here we find the K value crossed the D value within the last 2 weeks, providing a buy signal for traders. Furthermore, the stochastic crossover occurred below the 80 value, confirming the bullish crossover. In our previous video, we found a combination of indicators on NIO's daily chart projected bullish share price movement. Today we find those indicators correctly signaled a new bullish trend. Furthermore, NIO's weekly chart matched many of the bullish indicators we found on the daily charts. In sum, NIO seems to be poised for a bullish breakout following NIO Day 2021. So what are your thoughts? Where does NIO go from here? What's the next catalytic event after NIO Day? Let me know what you think in the comments section of the video. NIO Day is hours away, so in part 8 of our NIO stock analysis, we will help you navigate the aftermath and capitalize on NIO's share price movement. If you like this video and want to find out more in part 8 of our NIO stock analysis, hit the subscribe button now. For in part 8, we will expand on our NIO chart analysis and technical analysis and help you navigate the volatility we're very likely to see after NIO Day. Alright, see you in the next video, stock traders and cadets. Sign up for an actual stock market education. The tools, training, resources, step-by-step guidance, mentorship from real life traders and investors. But do something. Help me help you.